I believe that we have one of the very best trends remaining in Mexico that is not developed. I think we have a trend that ultimately, with drilling and exploration success, can be 5 million ounces plus. This is not just promotion. This is real economics.
But at what point and how quickly can you get into some kind of economic study, which is what the market's going to look at? When does a pre-feas happen? What's that timeline look like? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up and please leave your comments below. We do try to get back to absolutely everyone. All comments, questions, thoughts, much appreciated. Thank you. Also, if you want to subscribe, please click the button in the corner of the screen. And if you want to see more videos like this, click the notification bell. We spoke earlier today to Brad Langille, who's the CEO of GoGold Resources. They're a Mexican gold and silver producer. Now, like most companies, their share price has taken a bit of a knock, but we're more interested to find out whether COVID-19 is affecting their business, and if so, what they're doing about it. But it seems to be a message of business as usual. Now, we talked to Brad on a couple of occasions and he's run us through their operations. We're keen to see if he's still hitting those deadlines. The only thing that seems to have been affected is a slight setback into the delivery of their 43-101, which is now due in May. We talked to him also about the tailings project and indeed what the management's plans are for the rest of this year, having just raised $25 million. Let's hear what Brad had to say. Hello, Brad. How are you, sir?
Good. I'm good in this new world we're living in.
You're coping. Are you?
Coping.
So where are you at the moment?
I'm in Halifax, Nova Scotia.
Right.
And at home.
At home. Okay. Well, that's the place to be. Well, let's get into this. I'm sure we will talk about the C word somewhere in the conversation. But for now, why don't you kick off with a 1-minute overview for people new to the story, and we'll get into it.
Okay, GoGold is a Mexican-focused mining exploration development company. We have one operating mine, and we have an exploration project, which is really now developed into 2 exploration projects over a 35-kilometer trend. The group and the 4 public companies that I've been management of, CEO of, have been based in Mexico for, well, my whole career. I've been at this 27 years now. So excellent relationships in the country of Mexico. We're good at raising capital, which we deploy into our projects. We've built 3 mines over the last 24 years. We've majorly refurbished a 4th mine. We've raised over $800 million equity for our projects, and we've raised over $200 million of debt for our projects over the years.
Okay, thanks, Brad. I mean, this, and we'll flash up some of the previous interviews on the screen up here. People should go and reference those for a bit more detail about the projects. But let's kick off the question everyone's going to be asking: is the coronavirus affecting business?
Well, it's certainly the way we're operating is a little bit different than we were operating a month ago. We're following all the procedures as far as sanitary, as far as, in fact, people entering the site, we're taking their temperatures. We're abiding by all the, laws enacted in Mexico to cope with this and above. We're trying to follow the WHO protocols.
Okay.
So the operation, the mine is still running as per normal, with the exception of those protocols. And our development asset is still drilling away. Yes. Okay,
so it hasn't slowed down what you're doing, but you have had to implement some new procedures. Those don't sound like costly procedures. So is it genuinely business as usual?
No, it's generally business as usual. Those procedures aren't costly really at all. They're just abiding to, really, most of it's good common sense.
Right. Okay. I mean,
in Mexico, at least so far, and we certainly hope it remains this way, the rate of COVID in the population appears to be much lower than obviously in Europe and in even in Canada and the US. So for now, I hope that's a function of, who knows? We don't know. Maybe it's warmer weather, maybe whatever, but or maybe it's just a lack of testing. You're not sure at this point, and we're monitoring it day by day.
So all of your workers are Mexican, then you're not having sort of travel restrictions and local Mexicans at that. So it's not affecting travel plans that has a knock-on effect on your business by the sounds of it.
So travel, I mean, we do have two gentlemen from Halifax who travel back and forth. So that has been, well, for now it has been terminated, that travel. Myself, I'm very hands-on. I'm usually there every month. It's been a month now since I've been there, and it'll make it more difficult to be on site from Canada here. But fortunately, most of our people, and we have a very, very strong team and a very strong management team in Mexico. Our chief operating officer lives in Mexico, in East Nami. So he's there. So it really hasn't impacted us too much at this point.
No, we're getting that a lot from a lot of the CEOs we've been interviewing. There seems to be a resounding business as usual. However, obviously, the markets are taking a different approach. I think we had that reset where, at the end of quite a long bull run, I think a lot of the institutions are taking money off the table. Normal, you'd expect that, but very quickly followed close on the heels by the COVID-19 outbreak and it going global very quickly. That's had a big impact on a lot of junior companies. You're in production, you got some cash flows, you've raised some money recently, but your share price got knocked along. And I'm not going to pick companies up on this because I think everyone's got knocked. The market sentiment seems to have, taken a whack to the abdomen. So, what's your take on market conditions? When it's going to recover? And if so, do you think you'll get back to where you were?
I think we're just in a broad-based sell-off right now, and people are selling anything that's not nailed down. So it's a run to cash. But we saw this in 2008. I mean, everything was sold in 2008, and then it came back up after the crisis has settled down. I do feel that all this quantitative easing, and I think the governments and the central banks are doing the right thing. It's what they have to do. But there's being a tremendous amount of money created right now. And that typically, in the longer term, is good for precious metals. So I look forward to the price of the metal regaining what it's lost and going up from there. I think that we've just almost exponentially just increased the amount of money out there and the stimulus.
Yeah, for sure. But let's be clear. You're talking about two different things there. We're talking about your share price and its ability to regain value, and then you're talking about the price of gold. So, can you give me your views on how both those things correct themselves?
Right, and we talk about our share price, and it's taken a hit. I mean, it had a very, very good year last year. We were up 200%, and we did get our new project down in Jalisco, and we've been drilling there, and the results have been extremely good, which was very good for our share price. We hit a high of about 85 cents. We did opt to do a financing, and there was some discussion about that. Is that dilutive? But we did it for one reason: is because we were getting such great results on our project down in Jalisco at Los Ricos. And we were able to nail down some deals for some claims in what we're calling our Los Ricos North project. And that project, we're slowly working, a little bit quietly working away at that. And we saw an opportunity there, but we had to get that consolidation done first. And really, we've gone from being starting out at 2 rigs to now we're at 6 drill rigs. So it hasn't slowed us down there at all. And we had the opportunity. We went out for 15 million. There was demand for over 50 million, and we sell it 25 million Canadian. So the company has over 20 million US dollars. We report in US dollars in the bank. Parral, hey, the metal price just hit 1250 silver, but really we've been making money at Parral around 700,000 US a month. We're also owed 11.5 million from the Mexican government, US. So, we're well positioned, and actually the financing now in hindsight looks pretty good. You know?
Well, it looks like a stroke of genius, and sometimes luck plays a part, and timing plays a part. But you did that at 70 cents. It gives you a lot of cash in the bank at the moment, and if things did get worse, you've got optionality, I guess. There, I should say you've got a little bit of revenue coming in. I want to dig into that in a second. So, the companies that we see struggling, the ones that don't have cash in the bank, they are restricted in terms of what they can do. And if they do go and raise now, just one short month after you raised your money, that's a very expensive raise for most of these guys. So you must be pleased, I guess.
Yeah, look, we're happy. We're happy with the raise. We're very happy with our balance sheet. We even at $12.50, $12.50 is below our all-in sustaining costs. But now our all-in sustaining cost has probably changed because the peso has just been clobbered. It's up close to 24 pesos to the US dollar. And we sell in US dollars. 60% of our costs are in pesos. So the peso devalues, our cost goes down. And we're still getting that US dollar, which is strengthening. Interesting, the US dollar strengthening and gold's going up. But, so we look at that and we say, strong balance sheet. We have a mine that we've been operating now for 5.5 years, which is working great. I really think that silver being at $12.50 is an anomaly. But with the peso devaluing, I think we're pretty close to being cash flow positive still at site. And there's one other thing there I'd like to mention. On site at the mine, we just are commissioning, and we should be finished commissioning imminently, a SART. And that SART is a plant that we built for $3 million. It should pay back in the next 6 months. As we speak here, we were consuming 14 tons of cyanide a day. That's our biggest consumable. And it's in US dollars, by the way. And it's about $2,500 US dollars per ton. Now that SART plant right now is generating about 4 tons a day. So an extra 10,000 US a day. And it's generating copper too, which we can sell. So really, Parral, I feel that at mine site, we're breaking even still at these prices or doing a little better than breaking even. And I think it's an anomaly, the silver price at $12.50. It's at a ratio to gold of 100, almost hit 125 to 1, which has never happened.
Yeah, but silver's always has been fairly volatile.
True,
mineral, so you've got to take a slightly longer term view, which is I guess what you're doing in terms of your decision making and your planning. I do understand that, but can I just compartmentalize, because I don't want to get bounced around too much. Can I sort of compartmentalize this? So with the silver component of revenue stream, we talked last time about the tailings component, for instance, where I think you talked about a $13 silver price being paid. I mean, how do you manage the terms of those contracts whenever silver dips to below the price which you're being asked to pay? I mean, how does that work?
Sorry, the contracts?
Yeah, on the contracting side, because you talked about with the tailings you were removing the liability, you're doing the remediation there, but in the last interview you talked about a price around $13. But at today's prices that doesn't necessarily work.
All-in cost was around $13.
Yeah.
And the contracts that we have are with the municipality where it's $50,000 a month that we pay them. That's our obligation. And no obligation to reclamate the old tailing site. That's the city's obligation. Okay. We only have an obligation to reclamate the facility we built, which is, of course, at the same standard as US, Canada, Europe, that world standard. But as far as the cost at $13, I'd go back again to, there's been a lot of things shifting here. And one of the main things shifting here is the peso has been massively valued because they're an oil producer and their peso got hit pretty hard. So that reduces our cost substantially.
But how much so? But how are you making money still, I guess is what I'm getting at.
Yeah, yes, that's what I'm saying. We're break even or making it a bit of money at site, even at $12.50 silver.
Okay.
So I think we're in a very enviable position there. I doubt that there's any or very few other producers of silver in Mexico right now making money at these prices. But we feel and we're analyzing it, but we feel the peso probably reduces our cost by around $1.50 an ounce.
That's the number I wanted. Okay, understood.
Yeah.
Understood.
Yeah.
And with the tailings, you talked about sort of having some IP, some intellectual property there. You come out with your own process, which you think is quite unique, obviously. And you talked about the ability to perhaps sell into other groups in South America, because companies like DRD Gold or Jubilee Metals, they're doing their thing in Africa. There's no real competition in South America. Have you been carrying, I know it's not core focus, but have you been carrying on those conversations?
We have, and the project is very much a project that the Mexican government likes, for obvious reasons, the social, economic, environmental. We now have an operation that's operating. It's been operating 5.5 years. We're looking at all kinds of opportunities of other tailings, even if they're kind of far away. If they're high grade, or for us high grade, they can make economic sense to truck them over to our operation. So we have 8 years of reserves today next to us at Parral, but we're looking for all these other opportunities within trucking distance of our operation. And there's some that we're looking at right now that could substantially, if they come together, could substantially impact our cost, reducing it and increasing the metal produced. Also, we've developed this technology, this almost proprietary technology. Now, some of it's an agglomerate heap leach is not new to the world, but on tailings it is. And we found a way to do it that works. And it wasn't easy. The first 3 years were very difficult for the mine, but the last year and a half, 2 years have been, it's running quite nicely. And I just want to touch base there as well. Currently, our operation is running beautiful. Like, we're going to have another quarter in line with what we've been doing the last 2 or 3 quarters. So, we do have something there. It's not the sexiest mining project in the world, but if it can make money, there's nothing wrong with that, especially in this new world.
Well, that's again where I'm getting at, because I think this market reset is gonna sort the wheat from the chaff, right? And I'm trying to dig down and look at companies which have something different about them, in terms of mitigating risk, alternative revenue streams. And the tailings component here, I know it's not core, and we are going to come on to Los Ricos in a second. It seems to be, if you've got the process right and silver, volatile silver bumps up a bit over the course, on average, you're going to be able to contribute to your overhead by making a margin on these things. And if you're capable of nailing down these tailings contracts with other groups, it could be quite meaningful. It's very attractive in terms of a sort of non-dilutory financial contribution. So when you say it's business as usual, you mean it, as opposed to, I'm sure I'm going to this week and next be hearing lots of business as usual messages without it. But it's not business, it's not making money as usual. It's a case of we're surviving. So I'm just trying to dig down and sort of understand if that's still on the table, and if that is still, you think, going to deliver revenue for you going forward.
No, Parral is going to deliver revenue. I think even at this price, it's delivering revenue. And I think this price is an anomaly. But even though it's delivering revenue right now, our costs have just got reduced a lot by that SART plant as well, by $10,000 US a day. That's substantial. So Parral is delivering revenue. We're looking at more opportunity for Parral to try to increase that revenue. And we have something that could be applicable to other tailings in Mexico in the future. But I think the game may have changed a bit. I'm talking not just for GoGold, I'm talking for everybody. I think as we come out of this, there'll be more of a focus on who is generating revenue. And the exploration development plays, even the exploration development plays, I think the focus on them will be more around, okay, you have something. Is this going to be a mine in 5 years, 7 years? Or maybe there's the first 1,000,000 ounces that you have in front of you that you basically drilled off, and that could be a mine in a couple years. So I think the benefit of what I believe will be higher prices for the commodity are going to filter down, obviously, to the majors first, and then to mid-tiers and producers and projects that are not in the grassroots but in the development stage. And I think we're well positioned in that regard as well.
No, I think that's true. A lot of what you just said is true, and it's going to require people to look at the fundamentals of a business in a way which perhaps pre this current phase we find ourselves in, they haven't done very well. And we're certainly going to encourage people to look a little bit deeper as to the business fundamentals. What is the management team doing to enable and ensure success going forward? And I just quite like the tailings component as part of this story. But let's get on to the main attraction, which is you told me on a couple of occasions is the best project you've been on or seen for the last 20 years, Los Ricos. So What's been happening?
Yes. And it still is. We were drilling with 2 rigs, now we're at 6. We've been focused on the first area, which is Los Ricos. Now we have 2 projects. Really, it's a 35-kilometer trend. We're focused on the southern end of that trend, which we're going to call now Los Ricos South. And then we have another area called Montefavor at the north end of the trend. It's 20 kilometers away. It is a separate project, and it's a very good-looking project. We were in there with crews on the ground, but a little bit quietly because we had some real holes in the claim package that we had to close deals on, which we've done. We announced one about a month ago, and those deals now have consolidated everything we need there. Okay. And brought in data. It's almost like at Los Ricos North, or Montefavor, we're renaming it Los Ricos North Project. It's almost like we're starting all over again a year later where we were at Los Ricos South. We started at Los Ricos South, we had 60 drill holes. And we went in there and started drilling and getting great results and showing, building up a resource there, which we will still get out in the next couple of months. And at Los Ricos North, we started off there. And once we got this deal done a month ago, that deal was really pivotal for us. That also came with 50 drill holes. And they're not bad drill holes. There's a drill hole up there that's up to 24 meters at 27 grams gold. And there's a lot of drill holes up there like that. So the company we were dealing with, they were last in there in the early 2000s. And they just had a few small claims, and we were all around them with the claims that we owned. And they did a deal. They had a change of business. They're going in a different direction, in a different business. And they contacted us and said, "Would you like these claims?" We saw the drill holes. We said, "Absolutely." And it's not an expensive deal either. I mean, we're paying here about $450,000 over a couple of years, and tying everything together up there. Our team really feels that Los Ricos North, now at 50 drill holes, at an earlier stage than Los Ricos South, because that's getting close to the first resource, and we think it should be 1 million or 1 million plus there in that first resource, gold equivalent. That project to the north, Los Ricos North, we feel that has the potential to even be larger. And there's an old map that we have up there from 1916 from the Jalisco monograph, and that map shows 50 prospects on our claims up there. On the Los Ricos South project, that map showed about 5, and we've got one of them or 2 of them drilled now almost to completion. Los Ricos North, we have one team. They're just out climbing those hills and prospecting and finding targets to drill. And up there as well, we have the first 3 targets that are ready to drill. And we're just now getting the final permit so we can start drilling up Los Ricos North.
So okay, Again, when we spoke before, you thought you'd have the resource out by end of March, around now, right?
Right.
Things have been.
Yeah.
You've just explained why that's sort of set back. When do you think that'll be ready?
I think by May for sure we're going to get that resource out.
Okay.
By May, and it is a little delayed. And we've been doing a lot of drilling, and we've just thrown a lot more machines at it after the financing. We're hitting good results. We want to get everything into this maiden resource. I don't think, especially where things are in the world at the moment, that an extra 60 days will make much difference. So it's better if it's for us, if it's a better defined resource with more measured and indicated, and if it's that's size.
Yeah, I don't think in today's market it matters if it's 60 days out if there's a reason for it, because investors still expect management team to do what they say, and if the reason's good enough, like you're hitting some big numbers and you've got some more drill rigs in there and they're still hitting the kinds of numbers that you wanted, that's fine. I agree with you on that. But I think there's a need to, if I just look at some anecdotal information here, Brad, our viewing numbers are up 70% in this last crazy month. And it's not necessarily because we're doing anything different. It's just because I think people are sitting at home waiting for news because they're not allowed out. They've got to get the data, right? So
that's a good point. That's a good point. They're not distracted with other things as much, right? They're actually not at home.
Exactly.
Turning it up. Yeah.
Yeah, but they need you guys like your company, to be talking to them and explaining why things are going on. So resource will be out end of May-ish. Is that fair?
Yeah.
Yeah. Okay. You're expecting 1 million ounces or so?
1 million ounces or so. The grade we're expecting, it's 2 to 3 grams, 2.5 to 3 grams is still the gold equivalent grade that we're expecting.
Right.
And really the things that we're focusing on right now and take a little more time. We want to get some deep drilling in there, because what we have seen as we drill this thing deeper and deeper, we're getting some great results. We had one of our deepest holes that hit 18 meters of 8 grams. Now that's something we want to follow up. That's something that can be material to follow that up for the resource. So, and then to the northwest on the trend that we're drilling, the 1100 meter trend, we've been getting some real good results there in a second ore shoot that we're seeing. So we want to drill that. We want to include that in the resource. We want this resource we put out to best represent what we feel we have, what we saw the potential as being. And look, we're going to have lots of news over the next 60 days about things like that SART being finished. We got lots of news over lots of drill results coming out, and there's some great drill results. I'm sure we're going to come out in the next 60 days.
Yeah.
And we're going to develop here that first resource that really is a better defined resource as well. One that we can move quickly into a PEA.
Well, that brings it nicely onto my next point, Brad, which is guys like you've been there and done it before. You've been doing it for a long time, successfully. You've bought, sold, and made people money, which is fabulous, right? But you've got a picture in your head, and I'm looking at this going, okay, we've got a 43-101 coming out in May. You have told me in the past you've got a sense of what this thing's going to cost you. You've got a sense of the economics because, like I said, you've built plants, you've built mines, you've drilled holes. You know what's coming down the line, and you get a feel for it. But at what point and how quickly can you get into some kind of economic study, which is what the market's going to look at? Mm-hmm. First thing, probably a PA. It's a fairly early economic study, but how quickly can you get there? And when does a pre-feas happen? What's that timeline look like?
Well, I think we can get there very quickly, especially now with, I look at it this way. I think that if we can have an anchor on this project, this is where I'd like to end up. Here's an anchor that's 1 million ounces, one pit, great grade, and that we can put a PEA around. And it's solid. It's mostly measured and indicated. And we can do that, and we can say to the world, here's something that's solid. Here, you put your economics around that. Mm-hmm. And by the way, we're a year behind up at the other end of the trend. but we're hitting some amazing drill results up there. And then we have the best of both worlds. Well, we have a mine that's producing cash. We have a project that now becomes more, sure, it's a PEA, but it becomes more nearer term economics, nearer term production. And with a team that's built 3 mines and we've rebuilt a 4th, that people say, well, these guys can sell it, and there'll probably be could be a lot of interesting buyers. And also these guys can build it. And let's see where the dust settles here. Let's see what brings real value in the market.
But let's come back to the question, which was, tell me what that timeline looks like, or could look like. Yeah.
Well, for the PEA, really drilling all this drilling right now can actually shorten up that timeline as well, because when we're finished here, we're going to have good data to do that PEA, and I think we can get that PEA done by the end of the year or first quarter next year.
Okay.
That's when we get it.
Okay, so that's nice and aggressive. And then, because of the amount of drilling, do you envisage being able to get a PFS out quicker? Because these are the signals. This is the language that is used in the market, again, to define how people value you. You've listed off a whole bunch of reasons why you're very comfortable, because you've done it, been there, got the t-shirt. I get that. But people need these signals from you. So this accelerated timeline is important to them, because there's a lot of people screaming for attention out there at the moment. So I'm just trying to get you to tell me how you're going to do it.
Just the way that I think about that in my head, and from my experience and my team, and the key guys have been with me 10 to 15 years, and we built mines together. The way I think about it is that we drill this off. And when we drill this off, we drill it off with the mindset, how does this look in a mine? Not just we're out doing exploration. Like, we're building models all the time. We build pit models all the time, block modeling all the time. Every 10 holes we add it to our block model. So what I'm trying to say is that, for us, we're really drilling this off for it to be a mine, for it to be big, for this to be something very, very solid. This is not just promotion. This is real economics. This is real something that's the institutions in particular. And we just brought in some of the best institutions into that last financing, and those institutions can quickly see, and all of our investors will be able to see the real value of that. And at the same time, at the other end of the project, we also have something that's going to develop to be what I think very, very large along with this. So you have the best of both worlds. You have one end of the project, which is million plus, that's nearer term, that's defined, that can quickly be moved through the next studies to get to the point where you say, hey, this thing's ready to go, and at the other end, at the same time, we'll be building up the millions of ounces up there, and that's just a year or a year and a half behind. Beautiful. So I think that is the strategy. I think it's a strategy that's going to get us the most value in the market, and I think it's going to make us very appealing to some of our our peers as well.
Okay. So
we're not sitting there hostage, just waiting for somebody to come in and make us an offer. We know how to build mines.
That's my point. I say, what have the institutions bought into? They've bought into the fact that you mentioned a word there, big. You've got scale to this. This is a very long strike zone we're talking about here, and you're sitting at both ends. And what's the idea? So work your way down and meet up in the middle, kind of thing, have the option of doing that. That's what's going to get the big guys to take notice of you and step in.
I believe that we have one of the very best trends remaining in Mexico that is not developed. From my 24 years of experience doing this, from building some large mines, and I believe that we have consolidated what hasn't been essentially consolidated since the early part of the last century. And we are, to come up with things that are millions of ounces, that's quite remarkable. I think, myself, and this is my own personal view, I think we have a trend that ultimately, with drilling and exploration success, can be 5 million ounces plus. And it's just a strategy of how we develop what we see from our experience as being something that has, world-class size to it. And part of that will be, what's the narrative in the market? What does the investor want to see as well? Like, we do good technical work. We know how to take a project and move it through the stages of resource, economic studies, and we know how to do it quickly. And we have a lot of experience, so we know what's worth chasing. And I'll tell you one thing, that 35 kilometers of strike length and Los Ricos North and the project where we're now moving on to the next stage, resource and beyond, that's the things from my experience in my career, that is exactly what we should be doing right now at GoGold. And I hold the same opinion. This is the best thing I've had in the last 20 years, maybe the best thing I've had in my career. And we have the bank account, we have the skill, we have the experience to develop this into what will be, I think, the most attractive project in Mexico.
Brilliant. Brad, ultimately though, you've got to deliver for shareholders, okay? So there's a lot of positives today. It's a difficult market. It's mining. It was tough already. You're going to have to deliver for shareholders this year, and I think you're going to do that by better communication, more regular communication with them, because it seems to me you know what you're doing and you know where you're going. So appreciate your time today. Thank you very much from your bolt hole to mine here. I hope we get out of this in the next few months, but stay in touch. Let us know how you're getting on.
I'm very sure we will get out of this, and we're continuing on as per normal, and stay safe.
Thanks very much.